I'm Max Keiser. This is the Keiser Report. Everything appears to be sinking. Stacy Herbert, talk to me.
It's more like listing to the side everything is. Well, Max, I have this great headline here. South African police rescue Asian pair kidnapped in 419 scam. After hundreds and hundreds of billions of emails sent by Nigerian scamsters, somebody apparently answered one of them. A South Korean man received an email promising him tens of millions of dollars in a lottery scheme, and he traveled to South Africa when he fell for it. Of course, the scamsters then promptly kidnapped him and his daughter and held them for ransom. Now, the offer turned out to be a so-called 419 scam on an epic scale, the article says. The term 419 scam is used to describe a confidence trick, and it refers to Section 419 of the Nigerian Criminal Code for obtaining property through fraud.
Wow, so all that spam finally paid off. Only 5 trillion spams later. That's fantastic. They're really pioneering, the Nigerians, on the whole fraud basis. You know, all these banks on Wall Street have gone to school on this, of course, and they're building their models around the Nigerian fraud. So this is really the trendsetter around the globe.
But it's a theme that we've been focusing on over the last few years of Keiser Report, however, Max. Here's these guys, these Nigerian guys, there were like 4 or 5 of them, hard working. They had to send out 5 trillion emails to get this one guy to come down there. They're entrepreneurs. Wall Street does this over and over again, and who rescues us? Nobody. There is one potential rescuer here. Oakeshott tackles Goldman Sachs. So Liberal Democrat peer Lord Oakeshott, in an interview on Sky News, said it's been known for some time that Goldman helped Greece rig the figures to get into the euro and not meet all the tests they should have done. That's something that Lord MacDonald and I will be taking up further in the Lords.
You know, this brings up something. First of all, we've been talking about this for years now, that Goldman cooked Greece's books as part of the fraudulent euro scheme going back to 2000. But, you know, when I read the Sunday Times this past weekend, Rupert Murdoch's rag, they were covering this story, and they said 2 things. Number one, well, technically it's not illegal. But then later on in the story, they said, of course, Goldman Sachs did rig the markets, which, of course, is illegal. So here you have the problem on the mainstream media front. They've been told to lead the article by saying technically it's not legal, and then later on in the article, they have a crisis of conscience and they say, well, yes, they are rigging the markets, Goldman Sachs. They are committing financial fraud. But for propaganda purposes, they fail to put that in the lead. So let's correct that error right now. Goldman Sachs committed fraud as it relates to Greece's inclusion in the euro by rigging markets.
Exactly. They've defrauded not only the taxpayers, but bondholders and investors around the world who invested in this stuff based on Goldman Sachs' lie, of which only they knew, and the insiders in the Greek government who also were able to make huge profits on betting against their own debt.
Absolutely. This came out as well. Insiders were buying and selling those credit default swaps, booking huge gains based on this fraud perpetrated by Goldman Sachs. Now, suddenly, 10 years later, they're saying, oh, well, the whole Greek unraveling, the whole ratings downgrade unraveling, well, it has its genesis in that basic fraud. You know, I'm surprised Goldman Sachs doesn't try to buy these Nigerian email scamsters and incorporate them down there at 85 Broad Street or wherever where their offices are on Wall Street, because they could be doing great business for them.
Yeah, but the important thing here, Max, is that we laugh at the South Koreans who answered this email, and it took 5 trillion emails to finally get somebody to believe in the scam. People are still buying, to this day, various scams sold to them by Goldman Sachs and JP Morgan, and it should be just as ridiculous that people even believe the credit derivative fraud scams, the 419 scams of credit derivatives that people believe.
Yeah, well, Goldman Sachs traders are on the phone cold calling pension funds and grandmas and orphans, trying to push junk into these accounts. It's the old Wall Street, fast calls, fast talking, Wall Street junk sellers, and Goldman Sachs is just the same as anybody else. They've got a boiler room. Goldman Sachs is a boiler room. They sell a lot of really horrible junk into people's accounts, and they suffer horribly. At least the Sunday Times did mention that people are suffering pain and misery as a result of it. So it goes beyond just stealing money, Goldman Sachs. I mean, they're actually causing physical pain and, in some cases, death. You know that this Greek credit and debt crisis has trumped all other news, even the downgrade of various European nations. Everybody's most concerned about Greece, and you know the creditors are now in Greece trying to renegotiate this deal. Greece's debt talks with creditors stall amid coupon dispute. So that was last week when the creditors had walked away from the talks after failing to agree with the Greek government about how much money investors will lose by swapping their bonds, increasing the risk of the euro area's first sovereign default. So apparently it's the hedge funds in particular who want to make as much profit as possible, and the only way, therefore, they're demanding 100% repayment on these bonds or an outright default. They don't want a voluntary arrangement because they want to be paid off on their credit default swaps. Well, people should understand that leading up to the crisis was the result of financial masochism. These are financial firms like Goldman Sachs masochistically destroying countries like Greece and Ireland, Portugal, and others. Now that we've had the result of the crisis and they're trying to eke out austerity measures, this is sadism. So sadomasochism, economics, is the preferred model of the Wall Street bankers. And one only assumes that Lloyd Blankfein puts on, you know, one of those red ball around the neck with in the mouth. The gimp? The gimp. Goldman Sachs is Tim Geithner's gimp. So whenever Tim Geithner needs to push some more really bad sovereign debt, he says, call out the gimp. And out of the floor comes Lloyd Blankfein with one of those S&M contraptions on and a leather, latex stretch suit. And then some good old boys, some rednecks, have their way with him with shotguns. I wish we had that on video. Well, about these failed talks between the Greek government and the creditors, here's what Carl Denninger wrote. Greece, the fuse is in the box. The Greeks have figured out that when you owe someone money and borrowed it unsecured, as is always true for sovereigns, you have the trump hand. So Greece is finally recognizing that they owe billions and billions of dollars, and they're the ones that have the negotiating power in this situation. Why are they sitting at a table with these guys who are demanding 100% repayment? They should just walk away and say, I'll give you 2 cents on the dollar for even suggesting that. Absolutely. I mean, again, this article in the Times was very revealing because it talked about how Goldman Sachs was losing money hand over fist after the 9/11 attacks because volume had dried up. And it was some trader in Europe who came up, she found the loophole that allowed for Goldman to sell Greek fraudulent paper without getting quote-unquote caught. And this has set the stage for this massive journey into a fraudulent black hole. Now Greece is waking up to the fact that, wait a minute, you're the ones who stand to lose. Even if we default on all of our bonds, 2 or 3 years later, we can sell new bonds. Look at Iceland. Iceland was able to sell new bonds 2 or 3 years after they defaulted. Look at Argentina. They sold new bonds after they defaulted. The idea that you won't be able to sell bonds after you default is bogus. That's an idea sold to you by the same people who put you into this untenable position. I only wish Ireland would figure this out. Ireland still believes that they have to kowtow to the terrorists, the financial terrorists, that are holding them hostage. That's not true. At the top of the show, we talked about this 419 scam on an epic scale. Then Carl Denninger basically suggests that's what these no default risk of sovereign bonds is as well. Because he says they're right, the Greeks, to walk away, incidentally. The utter and complete fraud in our banking structures that allow institutions to hold these sorts of debts as quote-unquote risk-free, requiring no reserves and no capital behind them, is an outrage. It is systemic and intentional fraud perpetrated upon the world for the sole benefit of making possible national overspending with impunity, destroying any sort of market discipline aimed at budgetary deficits. Right, and to add to the psychosis, the rating agencies. Remember, last year they were saying countries like Greece and Ireland, they need to impose austerity measures in order to maintain their terrible rating. It'll be downgraded. Now, after these rating agencies have downgraded all these European countries, they're saying the reason is because of the austerity measures and the inability for these countries to pay their debt due to the austerity measures. It's complete psychosis. Remember, 2 or 3 years ago, they gave collateralized debt obligations that were 99% worthless junk and 1% AAA paper, a overall AAA rating. It's reverse drug dealing. Imagine a cocaine dealer who's selling you drugs. He will take some cocaine and mix it in with baby laxative and sell it to you like it's all cocaine. The rating agencies, S&P, Moody's, and Fitch, they do the reverse. They take essentially junk paper and they cut it with just a little bit of AAA paper. That's the baby laxative, the AAA paper, and they call the whole thing AAA. So it's reverse drug dealing by rating agencies as it pertains to sovereign debt. And unfortunately, everyone's been on this worthless stuff, and as a result, they're addicted to it, and they all need to be put in rehab.
Well, of course, this fraud that these are risk-free is what happened with MF Global, and that's why that whole scam fell apart and why the investors were looted and their funds stolen because, you know, one of the guys, a former governor, former Goldman Sachs dude, John Corzine, thought that all these European peripheral debts would be bailed out at 100 cents on the dollar because this is the way things operate in this scam.
Quick little aside here. You mentioned John Corzine. That money still hasn't been recovered. It's known now that Jamie Dimon stole from his own customers. He hasn't been facing any questions by Congress or any authority or any police or anything like this. So it's outright confiscation of wealth. Hello, confiscation of the Weimar Republic. That led to slippery slope down to imprisonment. And the new laws in the U.S., of course, support that, the NDAA, etc.
Yeah, but that's what a 419 scam is confiscation of property through fraud and deception, and that's what John Corzine operated. And you mentioned austerity, Max, and here's a headline that just shows you the mentality of these likes of these banksters and the oligarchs running our world. Downing Street rejects Diamond Jubilee Royal Yacht idea. So Education Secretary Michael Gove had proposed taxpayers fund a gift likely to cost at least £60 million to mark momentous occasion of the Queen's Diamond Jubilee. He said in spite and perhaps because of the austere times, the celebration should go beyond those of previous jubilees and mark the greater achievement and the diamond anniversary represents. Now, Downing Street has rejected this royal yacht. But it just shows you the mentality that they think austerity, there's never enough austerity for the peasants. But if the peasants must suffer, then we lords, we feel so bad that you must make us feel better and buy us yachts because it will make you feel better. The trickle-down joy to you peasants will be so grand.
How about a royal enema to help flush out the Queen? Stacy Herbert, thanks so much for being on the Keiser Report.
Thank you, Max.
Don't go away, much more coming your way, so stay right there.
This is Plod. Balancing on the edge of past and present. Mixing reality and nothingness. But if you enter this path, the mystery of supernatural will greet you. Shaman of Siberia on RT.
Welcome back to the Keiser Report. I'm Max Keiser. Time now to go to New York and speak with Warren Pollock, a semi-retired Wall Street executive who now blogs and vlogs at wepollock.com. Warren, welcome to the Keiser Report.
Hi, Max.
All right, Warren, we've gone over the details of the MF Global crime scene a few times here on the Keiser Report. Tell us what you think is the bigger story of MF Global.
Right now, we're watching law being changed to selective interest, the interests of J.P. Morgan, Goldman Sachs, and the banking cartel And what they're trying to do right now is set themselves up for a bank holiday. And what they're saying is that their speculation will always be subsidized by customer funds. And when you look at the amount of speculation which is in place, it's trillions of dollars versus real assets, which are only perhaps 1/100th of that amount. So when losses are sustained, which they will be through this financial crisis in Europe and in the U.S., the only source of savings that can be tapped is, in fact, customer funds. So we're watching J.P. Morgan in bankruptcy court trying to claw back customer funds and trying to change fact so that it can have priority over funds which were supposed to be segregated in the first place. And they're building a model for a global bank holiday in which we will see savings just basically raped from every person that has money in the system in a supposedly safe place, including pensions, bank accounts, brokerage accounts. And that's the process which is underway. It's the setting of precedent to steal people's money.
Now, Warren Pollock, you say that we're watching laws being changed for selective interests on Wall Street, but that's not new. That's been the story for 30 years, going all the way back to in a big burst of activity right after Reagan became president, and certainly after the savings and loan crisis. The lesson there that Wall Street learned was change the laws so when we do the crimes again, we won't get caught.
That's right.
So what's changed here? I mean, this is the same old story.
Well, what's changed is that the ability to sustain this looting and theft is running a bit thin, and the looting is rampant, and we're now at the point where we are in a totally lawless situation. And as we continue into this lawless process, things will start to destabilize. And what's so interesting with MF Global is that there is a physical world result to the MF Global insolvency. It's going to affect how farmers farm, how miners mine, how oil gets explored, and it's going to have dramatic implications in the physical world. And we're going to see a translation from this financial crisis into a physical world crisis. And that's all occurring because law is bent so out of shape that everything has become distorted. I would say at this point, we're at a point of maximum denial, where we have real-world physical events such as Fukushima, which are not in the news, the Fourth Estate's not covering them, and this means that people are ignoring the obvious ramifications to this crisis in the physical world. And Fukushima, too, is a financial problem. They don't want to account for nuclear energy properly. They don't want to dispose of nuclear waste. They don't want to cost nuclear meltdowns into the equation. And that's how the whole system works. It works right now, since World War II, to concentrate wealth in the hands of a select few, and we've been watching the model that was established through empire after World War II slowly degrade and become non-functional to the point where we will see physical world breakdown, and that will be expressed first through a bank holiday, which I think is on the near-term horizon.
Okay, so Warren Pollock, clients are demanding the MF Global trustees take action against J.P. Morgan, to which $200 million was transferred the day before MF Global declared bankruptcy. Any thoughts on J.P. Morgan's role in the crime?
Well, J.P. Morgan sent a letter out to MF Global, which was a comfort letter, in which MF Global was supposed to say that, no, the funds that you're dipping into aren't customer funds. They never got a response from MF Global. So you think that their hands were in the pot in that regard, that they sort of never got the comfort level, but they went ahead and sort of took customer collateral. We know that the trustee has $1.5 billion that he has, which he could distribute. That would get customers about 90% whole. Yet he's holding back on those funds. Why? Because there's another MF Global entity called MF Global Holdings, and J.P. Morgan is trying to claw back across the balance sheet once again, and to grab that money from MF Global Holdings into the MF Global customer accounts yet once again. And we have Louis Freeh managing a second bankruptcy. But this is all an accounting problem. When you have trillions of dollars worth of derivatives, a small percentage loss results in a debt that cannot be covered. So customer funds always have to be tapped in that regard. And it's not just MF Global. It's everyone that has a bank account at JP Morgan Chase, that has a bank account at Bank of America, that has a brokerage account that is hypothecated or rehypothecated. It's everyone that's living in the physical world that is reliant on an accounting system which is broken. You rely on oil, which is not properly cost accounted. We have U.S. military projection, $1.2 trillion a year in total, and that is not accounted into the price of oil. And we see U.S. empire breaking down in Middle East, North Africa. We see the U.S. desperate to try to keep global trade active. And we all monitor the financial aspects of this breakdown crisis because it's something that we can see. We can see the distortions caused by MF Global as JP Morgan and other entities try to claw back customer money that's not theirs to cover bad debt. What we don't see is the larger picture, which is that of total physical world breakdown, empire breakdown. Empire U.S. is failing, and it is first going to be expressed monetarily with a bank holiday, and we're going to see that in Europe, and then shortly thereafter we'll see it in the United States. And I may be a little bit ahead in timing. I was regarding mortgage-backed securities, but MF Global is the canary in the coal mine. And the same criminals are at work writing law to selective interest. Those are the criminals in the U.S. Congress, in the U.S. Senate, in the highest levels of banking. In MF Global, I was able to talk to everybody. I talked to people, Chairman Bart Chilton, I spoke to the chairman's lawyer at the CFTC. I reached up to the COO of the CME and had words with him. The only party that was not accessible to me were executives at JP Morgan Chase. And that's their strategy right now, is to stonewall, 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 and change facts selectively. And that's typical of the whole news cycle here in the U.S. Facts are selective. No one knows what the truth is. The truth is it's a breakdown crisis. We're watching Empire America fail. It's expressed monetarily first, and we're going to see that nothing is safe in terms of savings.
All right, so just to reemphasize this point that you're making here is that when the fraudsters and the banksters start mucking about and committing fraud in the commodities markets, oil, food, the wheat market, wheat futures, etc., this has enormous real-life, real-world consequences. It's a lot different than just let's say S&P futures contracts or currency futures contracts, where it's a lot of big banks and hedge funds are playing games with themselves and kind of financial masturbation, hoping to cash in on that game. But once it extends into real-world commodities, then you have things like food prices skyrocketing in the Middle East and revolutions taking place. And when my understanding is that, or my observation, is that once food prices get to over 40% of income, you do have a revolution. In America, that's about 15%, but it'll shortly be at 40%, and we will see that kind of revolution in America. Now, you've written a letter to CME. Tell us more, you just mentioned it, tell us more about the letter. Who is the CME group? What's their role in this MF Global crime story?
Well, we have the CME, which is basically a marketplace, and then we have MF Global, and then we have the customers. And really, when you look at the CME, they were the primary regulator, a DSRO, and they were responsible for conducting audits and for also making sure that regulations were in place at all of these dealers. And as such, I think that they have a fiduciary responsibility or responsibility to MF Global customers to make sure that all their market participants are acting ethically. And what's so interesting is when I had talks with the COO of the CME, Brian Durkin, he said that MF Global customers weren't his customers. And I find that sort of an outrageous statement on his part. So my letter to the CME was to say, look, you have a responsibility not only to your member firms, but you also have a responsibility to everyone that is giving you commissions by making a market at your exchange. And they don't seem to have that connection in place. And that was my open letter to the CME to say, okay, wake up. What responsibility do you have to everyone else? And when you talk to all these big financial institutions, none of them feel that they have a public fiduciary responsibility. But when you look at the way they were all historically organized, we used to have mutual companies in place for insurance. New York Stock Exchange was a mutual company. The CME was a mutual company. And these companies could draw back on their member firms to make good for losses. And no longer want to do that because they have stockholders. And the reason they have stockholders is because it was a profitable enterprise to take a nice, dodgy utility banking company and make it a public company. And we were able to concentrate wealth through the IPO process. We were able to concentrate wealth as stockholders. And everything is working against this idea that banking companies must be utility companies and they must provide a public benefit. And that's something which none of these banking companies and none of these finance companies understand because they've been allowed to speculate. And Glass-Steagall's Humpty Dumpty fell off the wall, and instead of Humpty Dumpty not being able to be put back together again, the foxes are just eating the egg that is broken on the floor. And that is where we are today as customers. We are the last person in line when these firms go bankrupt, and that is the precedent now being set by the bankruptcy court.
All right, Warren Pollock, you've mentioned bank holiday a couple of times, so why don't you describe more precisely what that means, what the timetable might be, and what people can expect?
Well, with a bank holiday, it would have catastrophic results. We would see the banks closed both in Europe and in the United States, at which point all savings would be revalued. And we'd watch a lot of this debt that's been in place, the trillions of dollars worth of derivatives, be worked out and netted. And what we would find is that all of these risks, which are supposed to be neutral, zero risk, have extreme amounts of risk. And what they'll do is they'll use savers' money to cover those bad bets. And you'll wake up one morning and you'll have new dollars or new euros in your pocket. And you'll see the purchasing power of those monetary instruments change. You might get $1 for every 5 that you had in savings, but you'll find that your new dollar has the purchasing power of half it did previous to the bank holiday. And that's exactly what has to happen here in Europe and also in the United States. Either that or everything gets obfuscated through a war process. And we see that occurring right now.
Warren Pollock, we're out of time, but I'll be on back soon. Thanks for being on the Keiser Report.
Thanks, Max.
All right, and that's going to do it for this edition of the Keiser Report with me, Max Keiser, and Stacy Herbert. I want to thank my guest, Warren Pollock. If you want to send me an email, please do so at keiserreport@rtt.ru, or you can follow us on Twitter or Facebook. Till next time, this is Max Keiser saying bye, y'all.